Hello traders, Gary Wagner here. It is 1:25 in Honolulu, 6:25 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 9th day of February 2024, and this is the evening report for gold and silver, our weekend review. Gold did not fare that well this week. We are looking at a weekly chart, and on a weekly chart, gold gave up approximately $15, and it is currently fixed at $2,038.70. When we convert it to a daily chart, we'll see that we also declined on the day, and today was a good portion of the week's decline, down $9.20 or 0.45%. This first chart is in Heikin Ashi format. I wanted to start with a Heikin Ashi chart to look to see if we could make any argument that we're either entering or in some sort of current trend. If so, how strong? With the Heikin Ashi, as you know, what you look for on a downtrend and an uptrend, the larger the candle, the stronger the trend. During a corrective period, you want an absence of upper wicks, and on a period when the market's rallying, you want an absence of lower wicks. Typically what happens is during a rally, at some point you will see the body size begin to contract, and you will get the upper and lower wicks. Typically, you'll get some sort of a pivotal candle. You can see that in this case, it is a pure doji, and then a color shift from green to red, starting small, building. When we look at current pricing, what we can see is we have pretty much alternating color. In other words, here we had 4 days of green candles, 4 or 5 days of red candles, one in which was green, but alternating back and forth. That tells you that we're looking at a compressed range, a sideways trading market with no apparent trend. I've just converted our daily Heikin Ashi to a weekly Heikin Ashi to see if we can see anything in terms of a bigger picture or on a longer term trend. We can definitely see that over the last few weeks, we've had consecutive red candles or doji-like candles, meaning potential pivotal candles. So we can say that our bias continues to be to the downside. The last upside rally wasn't very strong, nothing like when we look at the area back in March where you've got solid green candles with large body size. Although the studies we have been looking at show that we have absolutely not seen any kind of strong trend develop, we do have a bias to the downside. So I draw your attention to this Fibonacci retracement we put in from the low of 1863 up to the absolute high at $2,170 and the 50% retracement. It is not a Fibonacci number, but if we get further downside, I would look to see whether or not gold does find support from that price point. As I address in our opening letter today, many analysts cite the recent decline in gold as the direct result of dollar strength and higher yields on Treasury. However, I believe that the real culprit has to be an equity market that has been moving fast and to new all-time record highs. This is the Standard & Poor's 500. This is a weekly chart. It closed above 5,000 for the first time in history. When we convert the weekly to a daily, you can see that yesterday it came very, very close to closing above 5,000, but clearly broke through there and closed at 5,028. We certainly have a risk-on market environment in which investors are putting their money where they believe they have the highest probability of success and profits, and that has certainly been in U.S. equities. When we convert our standard candlestick chart to a Heikin Ashi chart, to determine the strength of trend, you can see that it is fairly consistent, because even though we have points in which the body size wanes, we have, for the most part, since November of last year, had an abundance of green candles, with many of them having no lower wicks, which tells us that the uptrend in U.S. equities is still very much in play. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you next week for the next set of evening reports for gold and silver. Have a great weekend. Bye-bye.